Philippine Stock Exchange began trading at 68.28. Right now it's at 68.02, up a tenth of 1%, 8 points. Joining us for her take on the markets, April Litan of CUL Financial. Hi, April. Good morning.
Hello, good morning, Mimi.
Good morning. So finally, the Philippines received the first batch of vaccines donated. There's Sinovac. Do you expect this to give the market that much needed shot in the arm, literally?
I do hope so, because that should help us reopen faster. As the president has said, he will not be inclined to open up the economy without a vaccine. So we really hope that this will mark the start of the mass inoculation of Filipinos.
Okay, but here's the thing, though. Despite us officially rolling out the COVID drive today, there are expectations like the ADB saying that they expect the Philippines to to hit herd immunity and to complete 100% vaccination for the population by the end of 2023. It's going to be, we're one of the laggards, and it's not surprising. Do you think that the fact that, expectations are we're going to be the last to fully vaccinate the population, do you think that's going to drive away foreign investors? I mean, instead of going back to the Philippines, they'd much rather go to, economies that will finish the vaccination sooner and recover faster.
Well, the fact that you have more people vaccinated and, you don't need to really reach herd immunity for people to be more confident going out. I mean, for example, if I had myself vaccinated, I'd probably, want to go out right away. And with these vaccinations, if you do see the number of infections going down, number of hospitalizations, mortality, etc., improving, then that should create enough confidence for people to go out. And we're really coming from a very low base. And if the earnings actually start to surprise positively, I don't think that's something that we should be sad about, even if we have not vaccinated everybody,
April, speaking of earnings, something more immediate happening this week. We get another big wave of earnings reports from index heavyweights that account for over 10% of the PSEI basket, like Meralco, Metropax, Mirada Power, PLDT, ICTSI, and we're getting February inflation print on Friday. Do you think these numbers are going to give the month of March a good head start, or are you saying don't count on it?
Well, the problem is, I think the main issue affecting the market right now is, of course, I guess, concerns about rising inflation and rising 10-year bond rates, not only here and also abroad. And of course, in the U.S., we're seeing the U.S. market registering some weakness. Now, as far as the full-year earnings are concerned, I think it's a given that it's going to be bad. So people are just kind of ignoring it. And inflation for February expected to go up. But then again, I guess everybody's also expecting the BSP not to raise rates, notwithstanding the higher inflation. So I think to some extent it will be a no issue. People are more concerned about other things at this point. So yeah, I think those will be what people are going to monitor or focus on at this point.
COVID-19 still front and center. Speaking of inflation, they're coming out, the numbers coming out on Friday, but the BSP over the weekend did say it expects February inflation to be higher than January's 4.2%, which is already beyond the 2 to 4% target range. The BSP is looking at 4.7%. It also says, they're going to be expecting this continued acceleration until the third quarter, and then maybe by fourth quarter until first quarter of next year, things start to normalize and go back down. April, just very quickly wanted to go over some interesting corporate stories with you. The PSE has okayed Double Dragon's rate. DDMPR is going to offer 5.95 billion shares at up to 2 pesos 25 a piece. Very quickly, at 225, I know this is the ceiling, but how does this look? How does the REIT look to you at 225? Expensive or just right?
Well, the yield would be at around 5.1%, I think, at that level. I would have wanted to have a higher yield, but I guess because of the low interest rate environment, people are searching for yield, and 5% is actually considered to be a good yield already at this stage, you know.
Okay, we also have this just in. Philippine IHS Market Manufacturing PMI unchanged at 52.5 in February. At least anything above 50 is expansion. So, okay. How about this? SM Investments also reporting that for the full year of 2020, profit actually fell 48% to 23.4 billion. As you mentioned, the bad earnings, not surprising. But here's the thing. In their outlook, SM Investments said they're expecting retail sales to remain weak, and they're looking at mergers and acquisitions to fuel growth. What do you make of this outlook?
Yeah, to a certain extent, it's not surprising. I think when they say to remain weak, it's relative to 2019 level, but I would say that they should still expect a strong recovery from last year coming from a low base. But I think, you know, we kind of know already that you know, there is still so much room for improvement as far as consumer spending is concerned this year, and it's taking a while. So I think that's what they mean, but they'd rather focus on opportunities, which, you know, of course, opportunities for M&A, because there may be some brands or some entrepreneurs who can't hold on to certain brands anymore and are willing to actually let go of them. And, you know, given the balance sheet strength of SM, then they are taking advantage of this opportunity to actually consolidate or, you know, buy more brands.
Okay. Just a few more. Wholesome Philippines posting a 22% drop in 2020 net sales to 26 billion pesos. They're looking to invest 121.5 million for alternative fuels. And of course, there was a report that To Go, the logistics company, is expecting to recover business. The business is expected to recover in the latter part of 2021. April, final question. Let's go to your blind item. A stock that you're monitoring closely. You like this stock, I understand. Don't tell us what it is, but tell us why.
Well, we like it, first of all, because it has a good share of both cyclical companies and defensive companies. And for its cyclical companies, there are some anecdotal evidence that they're seeing some recoveries. For example, the auto subsidiary said that they expect a strong rebound of car sales this year. And then the banking subsidiary, well, they disclosed quite a bit of cash dividends. And of course, the valuation is very cheap. The stock is trading below book value. So I find this to be a very good opportunity to buy this stock that I think will be able to return to pre-pandemic levels eventually.
Okay. We're just going to have to guess. Okay, maybe we don't guess. Of course, this stock that you were talking about, your stock pick, is actually GT Capital. April, thank you so much for joining us this morning.
Thank you.
And that is it for Market Edge. I'm Michelle Long. Thank you for watching. Stay safe and stay with ANC for more on the latest in the COVID-19 vaccine rollout. Now on day one, happening here in the Philippines. Stay with ANC.